Yesterday, AMC released its report, and I thoroughly analyzed it. I've been keeping an eye on it for several days and found many interesting things. I'll definitely tell you about it. Also, we'll take a look at the volatility because some very important moments are happening there too. Most importantly, the market seems to be predicting almost bankruptcy for this stock by mid-2025. This is crucial information, and I'll make sure to discuss it. I'll also show you my portfolio and how I managed to make profits even when AMC stock is falling. I'll show you my spreadsheet and we'll summarize the week. In general, everything will be explained in maximum detail, but let's start from the beginning. Yesterday, AMC released its report, which you can find on the company's official website. I'll try to tell you everything as detailed and as succinctly as possible so that everyone understands what's happening here. AMC beat expectations in the first quarter of 2024, beating consensus estimates for revenue, adjusted EBITDA, net income, and diluted earnings per share. Despite a 6% decline in North American box office revenue compared to 2023, AMC increased its domestic market share, maintained overall revenues similar to the prior year, and significantly improved profitability per visitor. The AMC successfully reduced the principal amount of debt by $17.5 million by exchanging debt for 2.5 million common shares in the first quarter of 2024. Effective January 1st, 2022, the company reduced its principal and deferred rent balance by more than $974 million. AMC ended the first quarter of 2024 with $624 million in free cash flow. In addition, the company received an additional $124.1 million in gross proceeds from the sale of 38.5 million shares of common stock after the end of the quarter. AMC continued to implement cost containment initiatives to address short-term challenges resulting from the 2023 Hollywood strikes. The company remains committed to reducing debt, extending debt maturities, and strengthening cash reserves to capitalize on future opportunities. The most important achievement during this time is AMC's ability to demonstrate resilience and adaptability in challenging operating environments by exceeding financial expectations, reducing debt, and maintaining a strong cash position. AMC has demonstrated its commitment to long-term sustainability and growth. It's very often mentioned that there are additional dilutions of shares, meaning the business isn't making money, it's just printing shares. There's nothing good here, in my opinion. If this continues for several years, the company could very well face bankruptcy because the huge level of debt, as mentioned by the company's CEO, is having a significant impact. To get rid of this debt, additional share offerings are happening which significantly decrease the value of the company's shares. But to fully understand what's happening, let's look at the volatility. Very important things are happening at the moment. Volatility reached over 200% at times and around 300% for some strikes, but it has stabilized around 100% now. This is a normal situation. Volatility decreases after the report, and naturally this information will help me informing and managing my strategies and portfolios from which I profit quite well. Let's take a look at the volatility smile. Something very interesting is happening here too. We observe that both the upside and downside volatility are increasing. Typically, put options are much more expensive than call options as investors hedge their risks, but currently, calls are more expensive than puts. This is certainly an anomaly and we will definitely capitalize on it to make money. Yes, we'll be selling volatility. While 99% of players are losing on AMC, I continue to profit on this stock. I'll briefly explain how I do it. But first, let's look at historical and implied volatility, a very important point. Historical volatility is the gray line, and implied volatility is the white line. Currently, implied volatility is 40% higher than its historical values. What does this tell us? I always say predicting price movement is very difficult. Nobody knows where the stock will go. However, predicting volatility is much easier because volatility always reverts to its historical values. This is something to remember. Therefore, we can play on the decrease in volatility. I'll show you how to do it right away. There are already many services available that help in building strategies. We can choose, for example, the end of June and say that volatility will decrease, let's say by 30%, so to speak, returning to its historical levels. And artificial intelligence will itself select various strategies with a 90% probability of profit. Yes, you heard it right, 90%. Let's look at one of these strategies. I must say right away the strategy is really complex. What are they offering us? They propose to sell 2 put options with a strike of $3, sell 3 put options with a strike of $3, sell 1 put option with a strike of $4, and buy 2 put options with a strike of $5. And all this for June. I must say that various strategies are used here. The strikes for selling and buying put options in this strategy are really very complex. I almost never open such a strategy because it is very difficult to manage. I am only showing you how it can be done. So here's this strategy. It has a 95% probability of profit if the volatility returns to its historical levels. While bloggers deceive and dream of some short squeeze, which has been happening for 2 years with nothing happening, stocks just keep falling and falling. Meanwhile, professional traders are making money on this stock by combining options. It's very interesting. I will definitely tell you about it, but I warn you right away, I in no way recommend relying on bots or bloggers or artificial intelligence. You need to think for yourself. You need to develop strategies on your own. Only then will you start making money. I always say this. I only showed you this to show that you can make money not only on price movements, but also on volatility movements. Now let's look at the most important point. This is the trading volume in options. As we can see, the largest volume is concentrated at the level of $3.5. Also $3 and $4. As for the put options, it's $3 and $2. As we can see, there is a huge resistance wall at $3 and $3.50. AMC just can't overcome it. As we can see, for several weeks, AMC has been trying to break through $3.50, but it's impossible due to this huge trading volume. And until it's done and the most recent report, I don't see how it will be possible. Again, regarding the earnings report, it could have allowed this because such a large volume is surpassed by other volume. That is, to break through this huge wall of puts, huge volumes of stock trading are needed, and only then could this volume be overcome. The earnings report could have caused such large trading volumes, but it didn't. Therefore, the probability of breaking through this wall has not yet been approached. Again, some news might come in, for example, that the company is temporarily suspending its additional stock sell program, and we will have large volumes, and we'll be able to break through this somewhat crumbling wall. Then yes, but in the near future, if there are no news, I don't think we'll be able to overcome this level. This needs to be closely watched. Also, let me show you the 3D volatility right away. Here we have all the information about dates, expirations, volatility, strikes. I often use this tool for trading, for forming my strategy. I remind you immediately of my philosophy that I do not know where the stock will go. I cannot predict price movements, and I guarantee you that no one knows where the stock will go. Question: how do you make money? I'll tell you that you can only make money through skillful position management. If you learn how to skillfully compose a portfolio, then you can definitely make money. How is this done? I show this with an example of my portfolio. Let's take a look. My goal is to outperform AMC stocks through skillful portfolio management. I do this gradually. I use combined option strategies. Everything is absolutely in my previous videos. You can see everything as clearly and easily as possible. I follow my strategy. I sold options. As we can see, I sold 10 call options with a strike price of $5. Some might say that this is very risky. No, I have purchased stocks, so this is not a risky strategy. Therefore, I have a profit of $145 from this strategy. I record this in our table, and my total profit is already $2,400. Let me summarize the week. Today is May 9th, 2024. I add this profit to the table. Also, I record the stock price. Currently, the stock is priced at $3.10. I round it off. And what do we have today? At the moment, even considering the purchase shares, I have 1,600 shares. Here you can see 1,600 shares. Even though they are not profitable for me, my strategy is still growing by 8%, as we can see. And AMC stocks are currently falling by 26%. And as we can see, my strategy outperforms these stocks by 34%, as we can see, systematically from week to week. Let's look at the graph. As we can see, the blue line represents my strategy, while the red line represents AMC. Look at the difference. It's steadily, systematically. Yes, there are no extraordinary profits here because the amounts are not very large. But if it were $100,000, of course, the amounts would be much, much larger. As we can see, I'm steadily outperforming the stock, systematically overtaking it. Recently, AMC stocks have been falling, and my portfolio is also falling, but just slightly, as we can see. 2 weeks ago, I had a 9% growth. Last week, it was 8%, 7.8%, meaning my portfolio is also falling, but much less than IMC stock. You can compare. This is through skillful management of strategies. Specifically, what I do is sell options. These options expire worthless and bring me money regardless. This is additional income, and thus I have already accumulated a solid part of the profit. And when AMC stock starts to rise, my portfolio will also start to rise. That's the logic. While AMC stocks are falling, my portfolio is falling, but very slowly. As soon as the stocks start to rise, my portfolio will rise with them. And that's what skillful position management is. You can find all the information in my previous videos. I explained everything in detail there as well. For example, on the second and third weeks, my strategy was lagging behind AMC stock. So if we look at February 18th, my strategy was almost 1% behind AMC stock. But of course, back then I hadn't closed or opened positions gradually. Systematically, it was growing. I show everything openly, demonstrating the logic of position management. This is the most crucial. This is how I skillfully manage portfolios. And now let's return to global short squeeze. My friends, I always tell you that I don't believe in a short squeeze up to $100, yes, $200. Many bloggers, in my opinion, they simply mislead you for views, for earning on YouTube. It's just deceit. Yes, I understand that many of you don't like this, but friends, it's time to live in reality, not virtual reality, where AMC is worth $1,000, $2,000, friends. It's time to accept this reality, that AMC can go bankrupt. Yes, that's possible too. That's also possible, friends. I understand it's very unpleasant. I understand that you've lost a lot of money on this company. I completely agree. It's very upsetting. Everything needs to be lived anew and done anew. And again, it's not just about believing in some incredible short squeezes or something else here. You need skillful portfolio management. I talk about it in as much detail as possible, friends. This is how money is made. Money is not made by dreaming of some short squeeze or bloggers assuring you for views and lying to your face. I tell the truth that such things are unlikely to happen. You need to change your approach. You need to do everything differently. Well, again, friends, if I'm wrong, I can imagine. I can agree that I can be wrong and the shares and AMC can rise to 30 to 50, even to $100. Let's suppose I'm wrong. What will happen, my friends? And I will say that nothing will happen, because for this, I have bought from the insurance call options. That is, as you can see, I have bought 10 insurance call. From this, it follows that if the stock suddenly starts to rise, I will also make a lot of money on it. That's what skillful position management is. It's when you don't believe in the short squeeze scenario, but if it happens, you will also make money on it. That's what real skillful position management is. That is, I don't believe that the stock will be worth $100. But if that happens, okay, I will also make a lot of money on it, and even a lot. That's what I always try to tell you. So my friends, you need to start all over again. Nothing to worry about. I will definitely support you. I believe in you. And now let's look at the market forecast. What's happening? If we look at June, then the market implies that by mid-June the stock will be worth $2.53. The market says that the stock will be worth less than today's values. All right. If we look, for example, at September 2024, the likelihood of a decline increases, and as we see, the stock will most likely be priced between $2 and $2.50 is certainly low. But the most important thing I always wanted to show is if we look, for example, at June 2025, then as we see, the likelihood of the stock being priced between 50 cents and $1 is 20%. So the highest probability essentially is bankruptcy. That is, naturally, the options market has incorporated all the information provided in the report. Naturally, all of this is factored in, taking into account all the debts. And we're saying the stock will be worth 50 cents. It seems improbable, but I'll remind you that before the stock split in 2023, the stock was worth $5. And if there hadn't been a stock split, currently the stock would be valued at 30 cents. Think about it. Before the split, the stock was worth 30 cents. Although who would have believed it when the stock, for example, it was worth $8 or even $14? Because it would be worth 30 cents, it's just improbable. But as we see it happen, therefore, it's quite likely that the stock could drop even to $1. Now, what I want to say is, even if you're the person who lost all the money or part of the money on AMC shares, and my friends, of course, there's no point in closing the position and selling the shares anymore, but there is a point in just leaving this moment. For example, it's like an experience saying, yes, I've learned a lot, and starting from scratch, and just soon when I get monetization on YouTube, I will start a new experiment from scratch, absolutely new portfolio where there will be $0, and I will show and tell how to form it. Here I will show which stocks I buy. Everything will be maximally detailed. Here I specially create a table. Everything will be completely free. I will tell which stocks I buy. We will have dividends. I will tell which positions I open on options. Everything will be maximally detailed. It will be all the same as with AMC stocks, only much, much more detailed. And most importantly, this information will be free, my friends. Who is giving such important, valuable information for free? Show me these people. Usually everyone sells courses, sells signals. If anything, I'm against signals. I think it's just some kind of deception. Here, everything will be maximally open. Any person can come in and see my positions. In open access, anytime the same as with AMC stocks. This table is available in the description. Anyone can come in, see what positions I open, what I close. Everything is maximally accessible. Everything is maximally transparent. Use it. So subscribe to the channel so as not to miss the start of this experiment. I also advise you to watch the previous videos and on what my portfolio formation will be based on when I start this experiment. Good luck to everyone.